this point with mortgage rates moving back towards the lower end of the channel, and with some other potentially positive tailwinds from improving sales in California, that people should be willing to pay a little bit more now than we were recommending before.
Is it true that at the peak last cycle, before the crisis hit, that Lennar only traded at a maximum of around 7 times forward price to earnings multiple?
Yeah, and the builders tend to trade to a smaller P as they move up through the cycle. So yeah, it's kind of the opposite of way some other groups trade. But yes, that's where Lennar was trading at that point.
Wow, because again, I mean, we were at the bubble, we were in a frenzy, and then the whole thing collapsed. And then obviously, sentiment against the builders has been bad for years. Is that turning? How's the performance been year to date?
Yeah, the performance has been pretty good year to date for both the distributors that we cover as well as the home builders. I believe Lennar's was up 33% year to date as of yesterday. And we think that can continue because the lower mortgage rates, and then also something that we referenced in the note today, that purchase mortgage applications saw a nice pop last week, up 11%. Versus being up mid-single digits for a few weeks before that. So it appears to us that consumers are finally taking notice of these lower rates, and we believe that's going to translate into better orders and earnings growth for the home builders.
You also like their outsized exposure to California?
Yeah, well, actually, I think what we were a little bit cautious until we saw a turn in those numbers, and now that the existing home sales comparisons in California are becoming less negative, and what we've heard from other builders is that incentives are starting to dial back there. So may not be completely out of the woods yet, but I think it's an interesting opportunity at this point.